Isaiah chapter 40, verse 31. But they who wait for the Lord shall renew their strength. They shall mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light.
Good morning, everybody. Good morning, good morning, good morning. Had to fix a couple things real quick. Just thought it would be an alright thing to start with some praise for God. You know, without God, none of this could possibly be even happening. So yeah, I hope you guys had a safe week, right? It has been a bit chaotic, right? We've been in a transitional period, and you know, sometimes the market's going to offer things that can be a little more difficult. But that's why the things we talk about here, although some may think, and some, you know, at some times it's a little bit boring, right? Because we talk about the realities of trading. Sometimes, you know, things are going to be a little bit more difficult, and that's when the rules and these conversations that we have on a weekly basis about the realities of trading, you know, sometimes that's going to kick in, and you're going to have that wisdom. Otherwise, you're going to learn it on your own, and it's going to be very painful. You know, the last, 5, almost 6 years, I've dealt with a lot of painful situations. Personally, in trading, you know, I've had every reason to quit. And those that have been with me for the last, or since I started, they know a lot about what I've had to overcome myself. And I'm sure, you know, we all have our own issues. But that's the thing. When we have a structured situational plan with all the different things incorporated in terms of skill sets we need and rules and all these things, that's what's going to keep you pushing through the times where it seems difficult. Or if you do end up trying to trade as a full-time trader to pay your bills, like say that's something you want to do, you're going to need the rules. You're going to fall back on rules. And if you don't have them and you don't take them serious because you just need an entry, you're going to be faced with the reality on your own. And, for many, it's too heavy of a burden to carry, needing to pay your bills through a market that's based on probabilities, and managing our emotions and all that can be difficult, especially if the pressure's on and you have to trade well, and your decisions are what either makes or breaks your ability to pay for your bills, take care of your family, and all that type of stuff. Your success in that is directly correlated to how disciplined you can be. Obviously, experience plays a deep role in that, which is something that I share with you guys. So I hope you can take a lot of the things that we talk about and apply them, because you're going to need it. I could sit here and talk about all the different concepts and all these different things, but at the end of the day, there's some things that you cannot avoid. And part of that has to do with rules, your ability to be disciplined, and the realities of, trading as a whole. And in order for us to be able to trade at a high level long term, aside from quitting a job or doing this full time and paying our bills with it, a lot of the things that are on the back end that are required for you to master it has to do with rules, has to do with limits, has to do with you being able to say no or sit back and be comfortable with not participating. And in a lot of cases, some maybe looking back on this previous week or the last 2 weeks being in that consolidation, which we're going to talk about in a little bit, a lot of you guys could probably look back and you have regrets, when that could have been avoided by you just simply following rules. Being okay and comfortable with the fact that, you tell yourself, I'm not going to take a trade, and not being impacted by it. Think about it. I've mentioned this before. You're going to be faced with one of two things. You're going to be faced with the pain of discipline or the pain of regret. The pain of discipline you get over quickly because, there's always something else that we could trade on later. But if you take damage and you disrespect the fact that you need rules, you totally disregard the need for rules, for discipline, then you're going to be faced with the pain of regret. And that can last months, weeks. You know what I mean? And it's difficult. Some can't even get over it. And a lot of times, that is one of the main reasons why they quit, why they can't continue, because they've destroyed themselves. There's people that mortgage their homes to get loans so they can put money into an account. They max out credit cards. They get stuck in this vicious cycle and they can't break through it, when the solution has always been and always will be to place rules around your issues and the possible downside, right? Position rules in front of those things and then attach your ability to follow your rules or the need to follow your rules to the why in your trading, because we let ourselves down a lot easier than we'll let our loved ones down. It's a lot more painful for some reason to let others down that we care about. And if our trading is attached to something like a reason why that has to do with our family or someone we love, or maybe you want to feed the homeless, maybe you want to start a charity so you can do things for your community, or whatever your reason for trading is. If you attach that to your ability to follow rules and be disciplined, for the need to follow your rules and be disciplined, it's a lot more difficult, and you'll think twice when it comes to breaking your rules or doing things outside of what you should be doing. All right? So yeah, again, every Sunday, pretty much every call, we talk about things like this, and there's a purpose behind it, because the question is, why do people fail? Why do some win? Why do some have a hard time even getting close to being break even? Why do a lot of people quit? And part of it has to do with the things we just talked about. Their inability to accept the reality and their inability to understand how important following rules are. No overtrading, no over leveraging, studying enough to the point where you master one model, having an organized process you can repeat. All these things lead you to, discovering the importance of following your rules and the damage that can be taken on if you don't, And a lot of people quit because of their inability to accept these things. This is a hard industry to be successful in. But then again, being mediocre, living a life that is less rewarding than we know is available to us, I think that's just as difficult to deal with. And since you guys and everyone that has been exposed to trading and has seen the possibilities, and we know that it's right within our grasp if we do the right things, that's a situation that you have to be faced with if you were to quit. You guys are here all the time, every week, for those of you that are continuously joining me, and you see the accuracy. You see that we can call the market. There's just that one little missing link. It has to do with you applying things. Maybe it's a discipline thing. Maybe it's adjustments in your process. Maybe you're missing something that is related to bias and narrative. Maybe you're missing something with your model. Maybe you're missing something with risk management. All that stuff is solvable, and you guys see the possibilities. So quitting, hopefully, is not an option for you guys. I know it has never been an option for me. What upset me before was how long it would take. And again, we're all different. We all learn differently. We all have different lives, different lifestyles, different demands. And we have to observe those things in our life so then we can adjust trading to fit whatever it is that whatever our life allows us to do. And you don't have to be a day trader to be successful. You don't have to do seconds charts. You don't have to do these things, but you have to figure out what style fits you. And, once you figure out what style fits you, there's a way that you can frame things around using the rules that we have, the structured processes we employ, and then, of course, all the other things that ICT teaches. It can all fit whatever it is that we need it to fit. We just have to be dedicated enough and observant enough to figure out exactly what trading requires from us, so then we can, cater our, personal model and trading activity to it, so it fits our lifestyle. Quitting, again, doesn't need to be an option, and it should never be an option, So doesn't matter how old we are, doesn't matter how much experience we have, doesn't matter how busy our life can be, we can make it fit. And if you have issues figuring out how that can be the case, I can show you how that is the reality. You can make just as much money, if not more, as a swing trader versus being a day trader, or vice versa. It just depends on your personality and, what you're choosing to do. But at the end of the day, it fits you. And those in my private community know there's personalized lessons, and, I cater to whatever you need, and of course you can get a lot of value as well from this community, and then the free Discord, because I don't leave nobody behind, but that other option is always available, because some just need more help than others, but yeah, I wanted to start this weekend session off with important things and perspectives that I've gotten some questions about the last week. Because psychology and, the things that I've mentioned, they're very common things that people talk to me about. Some people blow out and they're on the verge of quitting, but, they just need that conversation from someone that understands. And I'm happy to be a person that, a lot of people reach out to in that regard. And, because again, there's vast world of trading, this huge industry of people that they could be reaching out to, yet they've decided to reach out to me. So, it's only right that, I do my part and be there, because I needed that as well. So yeah, I'm grateful for you guys that hop on consistently. I'm grateful to you guys that reach out to me. It's very appreciated, just as much as you appreciate the advice I give. But I also appreciate you guys for your time and your interest in reaching out, seeing what I have to say about things. Right. So yeah, as always, right, let's kick into overdrive and start talking about what's to come. So next week, in my opinion, should be somewhat interesting. We don't have any chaotic, crazy news events. Should be all right. It's the end of the month, so as always, we have a start of the month protocol and we have an end of the month protocol. Start of the month generally has FOMC, NFP, CPI, blah blah blah, right? So you lower your risk by half the first week. The end of the week, or the end of the month, right? You also do a very similar thing, because if price is already delivered, say in the daily range, right? Say it's delivered aggressively through London and New York. For the most part, it's probably going to start dying out towards the end. Maybe it'll reverse, or maybe it'll, kind of just consolidate. Well, Power 3 happens on every time frame. So if we're thinking about the month and the monthly range, the start of the month is generally consolidation and manipulation, right? The end of the month is generally the end of the month, right? It's the end of the overall monthly range generally. So if we're thinking of Power 3 from the daily perspective and how that operates between each session, how towards the end of the session things could start to die out, we take that perspective and put it on the monthly range. The same thing will happen. So the start of the month and the end of the month, you have to operate in a different capacity than you would the middle portions of the expansion portion of the month, right? In the middle of the month, right? So that's where we're at right now, right? We're at a moment where price has been extremely bearish throughout this month, right? It's dropped. Previous month also did the same thing. Notice how the beginning of the month in February, sorry about that. Let me pull this up. So notice how the beginning of the month in February, if you look down at the bottom of your screen, I think you could see the date. You could see the start of the month was what? February opened, right? In February, and it consolidated, manipulated higher, and then dropped lower, right? So February ended up being a bearish month. Notice Power 3, right? The open took place, rallied above it, left a wick, and then dropped down, creating a bearish Power 3. Okay, so going into the month, that's what you need to be looking at things at. Like you need to look at things in that perspective, and because that helps you navigate, right? Similar to anticipating consolidations and reversals and all that, you got to be able to observe this stuff in terms of characteristics price will have given the current time we're in, right? That has to do with the monthly range, weekly range, daily ranges, and even the range is created in a session, right? They work inside those higher time frames, of course. But that's why the beginning of the month and the end of the month have to be looked at in a different capacity, because again, we're professional risk managers, right? So how do we know how to navigate risk throughout the different price delivery we see? Part of that is understanding Power 3, how it impacts on the monthly, weekly, and daily time frame. And then, of course, having different sets of rules for different times of the year, different times of the month, week, and day. All right? So given what we see here, price has been extremely bearish. There's no reason for us to think that anything is going to want to turn around aggressively and change that narrative. Again, we have some decent news coming out Monday. Should be interesting. PMI is pretty aggressive. Unemployment claims, I've said before, it's my favorite, right? Because it's just enough. It's not too much. It's not too little. But a lot of times it's a very clean delivery. If we have like a traditional buy or sell day, like bullish or bearish Power 3 on this day, generally employment claims present us with a pretty decent price delivery. All right, and so that's going to be my expectation. I feel like there could be potential opportunities throughout the week. There's a lot of news happening throughout the week on every single day, so we're going to keep in mind that perspective. I may go live on Thursday, possibly, maybe even on Friday morning as well. We'll see what transpires. If things look a little hectic and they don't really do much, then of course I'll just be doing what I normally do, just send out things in both communities. But yeah, I'll see if I want to go live on Thursday and Friday on YouTube. I go live every day in my private community for the most part, but yeah, we'll see we'll see what happens. So another thing to keep in mind too for the future, right? What's coming in the near future. April 2nd, there is something that Trump's doing in terms of tariffs. And it's pretty interesting how there's an NFP announcement on that day as well, alongside the implementation of heavy tariffs on these other countries. So because that's the case, there's going to be some chaos that takes place. We don't know exactly what's going to take place. It's probably going to be a negative result because, tariffs, from what I've seen, I've never seen huge tariffs employed throughout the time I've been a trader. But we're getting very good intel as far as certain geopolitical movements and how they affect the marketplace overall in the U.S. economy, and then how that translates into price delivery, right? Because the market is a forward-looking entity, we may have seen April 2nd's announcement priced in already. That may be why it's been so protracted in the first place. A lot of times things will happen in the market and then like ahead of a news event or some big announcement, and then that announcement will come out and nothing takes place. That's because things are forward looking. And a lot of times things will happen in the marketplace before things take place in the real world, right? Like, for example, the virus that we had to all go through. The market crashed 2 weeks before it came out in March of 2020, right? And then, of course, things continue to be sporadic because we had to deal with that crap for a long time. But that's a good example of how things get priced in before things take place. Pretty interesting how that took place. Nobody knew anything about anything coming, but the market reacted ahead of time. Just evidence that things are heavily controlled in many, many aspects in the world we live in. Those are just some things we got to keep in mind. We don't know exactly what it's going to do, right? We also don't have a solidified understanding before the open takes place on Sundays as far as what is for sure going to happen or what's for sure not going to happen. That's just a gray area that we all have to deal with as a trader. So waiting for making our analysis, always, especially if there's red news events or crazy news events that take place, we go into each week with a light-handed idea. And then we look and see what the overall delivery after Sunday's open is going to present for us, so then we can start to come to deeper, stronger conclusions as far as what is more likely versus what is less likely. Okay? But yeah, overall, we have a good, reasonable idea that, price could want to, potentially for the indices, right? We could want to blow this high out, these highs. We do see that there's an SMT there, so that may not allow price to go up there. It may not need to go up there for the most part. It may just leave it and then, just continue to rage lower. But yeah, before we get to the indices, as always, let's start here. Okay. So I've been mentioning this also for the last couple of years. ICT's mentioned it as well throughout majority of his lessons that he talks about the interest rates and risk on, risk off behaviors. But when we see the interest rate markets consolidating, bonds and yields are just one of them. It doesn't matter if any of them are consolidating, not doing much. That's going to send reverberations through the marketplace. Okay, so because this has been stuck in a range, back and forth, overlapping, that is an indicator that things are in a high resistance environment. Okay, and if this stuff is stalling out, right, the bonds and yields, then obviously that'll send reverberations through the DXY and the foreign currencies as well as the indices for the most part. The currencies have been flying off the handle, right, to the buy side in terms of euro and GBP, off the heels of the weak dollar. So they've been they've been like the only thing that has been extremely directionally based to the buy side, and not cracked in correlation as far as the relationship between the bonds and the currencies, right? The bonds and the currencies and the indices are generally supposed to move together, at least in some capacity. For the most part, that has not been entirely the case for the indices specifically. And of course, that has to do with all the crap going on. There's a lot of chaos taking place, a lot of adjustments, a lot of different things that impact the economy, right? But we'll see if that ends up changing. Another thing as well, right? Aside from the stagnant, consolidated bonds and yields market, aside from that, so aside from that, we have the overall rollover that's taken place. Okay, I mentioned before it even took place that the week before, the week of, and the week after the rollover from one quarter to the next generally can present you with a more difficult environment to trade in. Now, if you go back and look at the previous week, right, prior to the one that just passed, that's the week before. Last week was the week of. And both of those environments, at least for the indices, were a bit more difficult, right? Look at what happened, right? Consolidation. So you've been able to witness, those of you that are paying attention, that have been with me for this time period, that heard me say these things, you just witnessed, alongside a lot of other things that I continuously talk about, you witnessed the validity behind that assumption, anticipating consolidation or harder conditions. Okay? So you just were able to watch that take place related to the quarterly rollover and a situation where you can then move forward and anticipate when conditions may be a little bit more difficult, a little less clear, right, and direct in terms of delivery. Okay? So do not discount that. It should be written down in your journal. Keep that as a forward-looking rule, right? The week of, or the week before, the week of, and week after, the quarterly rollover from one quarter to the next generally will be a harder condition to trade in. So what does that information help us do? That helps us gauge our risk profile, what we're going to do in terms of risk management. Are we going to be trading normally, right? Keep it at a normal risk exposure amount? Or are we going to drop our risk like we did, and anticipate more difficult conditions? So if we're wrong, we're not going to think that trading doesn't work and all this other nonsense. It's just the conditions were a little bit more difficult because of specific factors in place. All right. So very important. It's not always, again, about entries. You got to know how to navigate price and how you should behave in terms of risk. And, thankfully you were able to observe one critical element that generally brings more difficult trading environments. All right, so next time you have a tool you can employ in terms of analysis and anticipation, so then when you see price starting to get into somewhat of a more difficult environment, consolidating and overlapping higher time frame candles and whatnot, you're able to then navigate your risk in a different way. Okay, so as far as what the yields are doing, because we'll look at the yields first. The yields are still in that range. We still have that SMT at the lows. So again, we got to figure out what price is going to end up doing here, this rest of this month going into next month will most likely show us a little bit more clarity. If we look at this weekly candle, right, we have the weekly high and the weekly low, right? Overall, things are still to the downside, right? The other two, the 5-year and the 10-year, have swept out the lows, right? So we can also see that the 30-year has failed to sweep out the lows. All right, so we're going to want to see how price is going to behave within that framework. And again, the first liquidity pool that we always observe is going to be the weekly high and the weekly low going into a new week, right? If we're going into a new month, right, we want to observe the current or previous month's high and month's low, because when price gets close to those levels, like it did here, right, a lot of times that could end up being a draw on liquidity. Sometimes that draw on liquidity can last for a week or so, or more. So you can be cemented in your narrative if you're able to observe or at least be aware of the previous month's high and low, or a very close monthly high or low. So you want to start with that, right? So put the high and low for the month, the current month, And of course, you can observe the previous one, but the previous month's low has been violated here. And as a result, we see price turning around. Also have an order block. If we drag this over, we also have a inversion fair value gap. Drag that over, you could see the low of that as well being respected fairly nicely, right? So we're now piecing together a reason why price on this monthly time frame, why we have seen some type of retracement in this regard, right? So piecing together the puzzle bit by bit. Okay, so again, going into this new week, we want to observe and keep in mind the previous or the current month's high and low, because that can end up being something significant, right? So if we drop down to the weekly chart, again, we see this in consolidation. We want to mark off the previous week's low here, previous week's high. If it's going to run higher or lower, as I always say, it's going to have to take out one of those two things if we're not going to be in a consolidated range and we are going to be trending. Another thing you want to keep in mind as well is the fact that small ranges generally lead to large ranges, right? So with that being the case, we're due for some type of large expansion, right? We'll see if the month is going to give us that, right? Because we're really close to the end of the month. We're also inside of the week after the rollover, which, like I mentioned, puts our expectation in a view of, like, there may be continued difficulty. Excuse me. Right, so we want to keep that in mind going into this next week. All right, but again, weekly high, weekly low. Right, after we get that, right, we go from the month to the weekly, get those highs and lows. After we look at that, we look at near-term PD arrays, things that are close to us. So we're looking at this fair value gap, right? We could put that on the chart. We've got some new week opening gaps you see on the chart. It's a little bit busy, but I hope it's okay. Let me see. So this is that wick, right? We could see how price in this range here, right? What we've been bouncing inside of. Price has this very large new week opening gap in here, right? It's stayed above it. There's other new week opening gaps in there too. But then again, we also have this bullish fair value gap that price traded into. It's been having some difficulty getting through that. See, that's something that we're going to want to continue to monitor as well. Again, like I said, you want the previous week's high and previous week's low. Also, this fair value gap. So we have 3 areas we've observed here that are in close proximity, and price has just been bouncing in between those. This fair value gap, this large volume imbalance on this time frame, which is a new week opening gap. And then we also have this fair value gap in here. We're overlapping in candles. So again, this is to be expected given what we know about the week before, week of, and week after a rollover period. Okay. We want to see if the breakdown below this low continues the way that continues, and we can trust it, will come directly from price's ability to stay below this weekly fair value gap here. It's acting as an inversion so far. But then we also have this fair value gap too that may also continue to hold in price and continue to act as dynamic resistance. So yeah. And then of course, if price is going to decline here, if it is going to target the sell side, we also have this monthly fair value gap. We still have a little bit more of that range we can target if it does choose to provide more evidence that it's going to continue to drop. I feel like we're going to go in with that being the case. So we'll see, right? Use that as a baseline. If we were to violate this high and violate this fair value gap and this inversion fair value gap, that's 1, 2, 3 levels of buy side, right? 3 PD arrays to the upside. So that would put me on the side of, potentially seeking more buy side. If that is going to be the case, then we have a high here. Okay, let me minimize that, right? So we have a high here. So we would look for price to maybe target that if we were to show evidence that we want to stay above these upper levels. All right. So yeah, simple as that. And then if price is going to target the sell side and continue, again, weekly high and low, previous week's high and low, and then a previous week's high and low, right? The previous, this week, the high was taken inside of a fair value gap. So it purged that, and then now we see that it's been rejecting, still holding to the downside. Another observation is the fact that we swept out this low. It swept that low out, which is a higher time frame PD array, and price is now reverted back, right? Gave a reversal back into what? A premium array. So we took external range, ran off that high, or ran off the low, and we came back into a internal range liquidity pool. So now we're going to want to observe if that's going to continue. And again, if that was to be violated to the upside, we start to consider potential buy side delivery, and it should have an impact with the DXY. And if that was to take place, maybe we see DXY go higher. But if this continues to drop here, we'll probably continue to see DXY continue to fall towards the downside until something changes, right? Or at least that's what we would want to see if correlation is going to stay in play. If not, obviously, price lacking correlation between assets, again, that puts you in a position of higher risk, right? Regardless of what you see in the chart. The first indicator or validation tactic for price being in a clean trending environment, a lot of times low resistance environment, has to do with symmetrical risk on risk off behavior, meaning all the market symmetry relationships are in play, right, and are delivering how they should. That being, if the yields are going lower, the DXY should go lower, right? And that should also promote bullish indices and foreign currencies. And then vice versa, if this is going higher, the DXY should go higher. And then if that's the case, we should see the overall indices in GBP, USD, Euro USD go lower. Commodities as well. All right, so again, that's one of the first indicators, right? But as far as what we're looking for going into this next week, again, I will continue to watch for reasons for price to want to drop. We can also see that there's relative equal lows here. Very obvious relative equal lows here. And then right below that, we see a volume imbalance as well as a fair value gap. So this could very easily become the target using this internal range delivery. Maybe it punches up here one more time and then goes, at least for the 5-year. But then if that was to take place and that's going to hold, then again, we just continue to favor downside, which we've been walking with since this order block here, right, was respected. If you go back in January and look at the live calls, you'll see the whole breakdown as well, and what has led us to continuously seeing price drop and how we've been managing this decline here in the yields. It's the same exact process if you're navigating other assets. All the same tactics we use here in terms of validation, invalidation, different characteristics we see in price, the anticipation of consolidation, all that stuff is applicable to whatever asset you trade. It's all pretty much the same stuff, aside from the overall correlation, right? Because it's something that generally can, fluctuate a bit, right? But yeah, so that is going to be my invalidation, this fair value gap, the inversion fair value gap, and this swing high here. So unless that's taken, I'm going to continue to want to see this drop. By the way, if you guys get value from the content, definitely like the video, subscribe, leave any questions in the comments, and if you have any friends that you think can take value from what it is we do here, definitely spread the word. You guys are much appreciated. So yeah, I hope all this stuff so far makes sense. It's pretty straightforward, I hope. But yeah, we're going to continue to favor downside unless we get that displacement to the buy side, taking out these upper levels. We do want to consider the SMT at the lows. If that stays intact and we break the high up here, I mean, it's just continuously adding on evidence that we're going to go higher. And then we'll see the impact that has going into the DXY and then going into the future weeks, right? But yeah, if we go to the daily chart real fast, let's take a look at what we see. So yeah, transposing all those levels down to this time frame, we can see we could see continuous respect to this level here, this upper level I mentioned that I would like to see hold if we are going to see down delivery. So yeah, nothing is really different. We do have a new week opening gap in here. There's another new week opening gap here from last week, and then of course we have this one. So we're stuck inside that as well. So another thing in terms of anticipating consolidation, if we're at a higher time frame equilibrium level, right, that can also be indicative of consolidation, especially if these other things can be layered on top of that, like the rollover in the quarter or going into a new week, going into a new month, whatever. Then you can also add another thing. If there's overlapping new week opening gaps, there's multiples of them. In this case, there's 3 or 4. If you're bouncing around, if you identify price bouncing around from one to the next, it's not really going anywhere, we're stuck inside of that range, which is overlaid with new week opening gaps, right? So if you see that characteristic on top of all the other things we've talked about, you're able to justify the consolidation. And what does that mean? Why is that helpful? Because if you're in consolidation, you don't want to trade like you're in a trending environment. And if you anticipate a consolidation coming, again, you don't want to trade like you're in a trending environment, because that's the time when you'll blow your account, especially if you don't have rules in place. That's why they're so important. That's why this aspect of things is so important, right? So yeah, not much changes from the weekly to this time frame. One last pool of liquidity we're going to mention again, as I always mention. It's going to be Friday's high and low. So the previous candle here, that high and that low is going to be just as important as a weekly high and weekly low from the previous week. Because if the previous week's high and low, or high or low, is going to be attacked in any capacity, right, it's going to have to break the previous candle's high and low. So going into Monday, Sunday and Monday generally, you're always going to want to consider the Friday's high and Friday's low. The liquidity areas I've mentioned are static, right? I mention them all the time. But you have to keep tabs on these levels, because think about it like this. If the weekly high or low, right, whichever one, if it's going to be attacked, price is going to open up here to start the new week. What's the closest liquidity pool? Previous candle from Friday, right? So there's liquidity above and below that candle's high and low. So maybe there's a tradable opportunity to get you to one of those levels, right? If it's headed to the weekly low, the first target is going to be Friday's low. I wouldn't be surprised if the Friday's high ends up as the opposing liquidity. Price opens up maybe on Sunday, runs a bit higher, maybe digs inside this wick, taking out Friday's high, pairs that with some type of short opportunity for smart money in conjunction with the higher time frame PD arrays here. And then maybe that sets the stage for the high of the week forming to then target the weekly low. In which case, if that was to take place, it would sweep Friday's high, position the opposing liquidity, deliver from a higher time frame premium array to then target Friday's low on its way to the weekly low from last week. And then all that could be working in the narrative targeting the monthly low potentially. Right? So you can start to see how the levels of liquidity we talk about get paired inside of the higher time frame narrative, and it's like layered. It's a layered effect. But you're observing the skill set as far as identifying liquidity at a very advanced level. And of course, the understanding and clarity that is derived from the way that we do things, it's unrivaled, right? It's unmatched. And it's something that never changes. The target may fluctuate, but these levels are always there for us to build a narrative around. So what does that mean? That means that there's always something you can figure out a trade within, and you can always stay rooted on that higher time frame and, start to be real confident about how you navigate price delivery in terms of liquidity and PD arrays. All right, so yeah, I hope that makes sense. Again, our line in the sand is going to be this high. And if that high is lost, at the current moment, this will act as an intermediate term high. Why? Because it's got a lower high to the left, lower high to the right, fractal high to the left and right, and then one important high that's reaching into a fair value gap. Okay, so again, if that's violated, intermediate term highs don't get violated for the most part if price is going to continue. Because we're on the higher time frame, that intermediate term high, which is a high with the lower high to the right and left, that hits into a fair value gap, if that stays intact, it justifies us continuing to march lower in conjunction with the other things that we talk about, right, to validate this particular downside objective. But if it was to be violated, aside from the fair value gaps that I've mentioned, and the inversion fair value gap, so on and so forth, aside from that, one of the rules with intermediate term highs, if it's going to continue, is that they don't get violated. So you could be confident that it's going to hold unless it's violated, right? Then you can piece these other things on top of it to justify a overall adjustment in the narrative. So then you can faithfully and confidently adjust and get back in line with whatever's offered at that time, right? So yeah, very important. Okay. So yeah, that is the assumption for the yields. Moving on to the bond market. Just let me pull the right one up real quick. So yeah, looking at the bond market, I want you guys to sit here and look at what we see, right? Based on some of the things that we just talked about. Remember, this is counter to to the yield markets. It generally does the opposite. So keeping that in mind, I want you guys to sit here and look at the chart and just think about some of the things that you see in price. Maybe you can drop the observations you have in the chat box real quick, so then I can get a feel for what you guys see in price before I move forward and give my own opinion and point out things that I'm going to point out. ICT has mentioned before that you're in graduation mode when you can observe a chart that the mentor looks at and you can identify at least most of the things that the mentor places on the chart and what they look for, right? If they're talking about something, if you can look at a chart before they talk about it and come up with very similar ideas that are in alignment with what that person you're learning from is saying, it's a beautiful gauge as far as whether you're making progress towards the skill set being mastered, the goals that you're aiming to achieve. So I want to give you guys the opportunity to do that real quick. And of course, we'll jump back in like a minute or so. Remember, you can leave any observations you feel comfortable with in the chat as well. All right, Fritz says, let me open that up real quick. 10-year, 5-year, expanding out of a bullish fair value gap. Also 5 and 10 swept the previous high. That's a good observation. T-bond respected the FVG, but only. One thing as well, just in case you don't you weren't aware, the T-bond is actually the 30-year. I don't know why they don't put 30-year T-note, but they just call it the T-bond, I guess. Right? I can't find any of them that say the 30-year. Like these ones say the 10 and 5, but this is the 30-year, just in case you didn't know. Yeah, T-bond respected the FVG, but only just, yeah. Yeah. All right. Any other observations? Appreciate you for mentioning that, Fritz. All right, so yeah. So like Fritz said, we see there's this fair value gap in here. Another thing we can make an observation on is the fact that the T-bond, the 5-year, is the only one out of the 3 that tapped into the fair value gap that's below in each of these markets. All 3 are bullish, but not sure if a retracement could be on the cards due to high being swept. Yeah, so again, if we are anticipating that the yields are going to continue lower, of course, that's what we want to go into next week looking at, because it's what it seems like it's going to happen. Because it's, things have been respecting the upper PD arrays, and the delivery just still looks overall bearish, right? As far as the delivery is concerned, we'll see if that takes place. But if that's going to continue to take place, obviously the bonds, if they're opposed to that, then the assumption that we're going to continue to stay bullish, it's valid. I mentioned in the previous week that if price was to violate this fair value gap in here and break this low and start really rampaging lower, respecting this as a bearish PD array, that would be breaking multiple PD arrays to the downside, and it would probably continue to drop, which would have an influence on the indices and the foreign currencies. All right, so we're going to continue with that same observation. That's going to be our line in the sand, is these lower particular levels, right? So we should anticipate the price can continuously support price going higher until proven otherwise. There is this SMT at the highs we mentioned last week as well, and we are delivering into this wick here, kind of failing to break through it entirely. So we're going to keep these observations in mind, alongside the fact that we are also still, similar to the yields, in a range-bound environment, right? Price is still bouncing back and forth, so we're going to want to see when price wants to break out, okay? And when it does, we'll be able to use that as a further confluence as far as justification to our foreign currencies and the indices. Okay, but the line in the sand is down here. I'm going to continue to assume that price is going to want to continue to purge buy-side liquidity until proven otherwise. Proving it otherwise would basically come from price breaking down below this. We have this middle of the wick here, so price has not had to come down into the full fair value gap. It didn't even come down to it at all. Remember what I said about large wicks that cross over or dig into fair value gaps, right? This fair value gap, considering that there's been a strong buy side and sell side delivery within that wick that overlaps this fair value gap, that range becomes a balanced price range, okay, or should act as a balanced price range. So because that's the case, you can see prices respecting that behavior, right? I talked about that last week. I believe it was with the NASDAQ. And price was trying to pull back higher, but was having trouble doing so. And that same thing is what we're looking at here. All right, although that correlation's kind of messed up, it's been messed up between the bonds and the indices. But that's a justification we're going to have for this as well. It's going to be the midpoint of this is going to act as a bullish PD array, fair value gap, and then of course the low, right? And then there's a gap here staying above that. So if that all stays intact, we'll continue to press higher and until we're proven otherwise. Proving otherwise would be those levels being violated. Okay, so 30-year also ranging inside. Yeah, for sure, right? It's got the overlapping fair value gap. This here should have acted also as a balanced price range as well. The delivery to the buy side, delivery to the sell side, overlapping fair value gaps on both sides. Generally, you drag that across, it should act as a balanced price range. Because we're attempting through that so aggressively, and we have, what I mentioned down below, and price has been bullish at this moment, or at this time, because that's not remaining below it, it's showing me that, there's more of a likelihood for us to continue pushing higher. And of course, you have this similar factor taking place across the board here. So that's another indicator that we're going to use to continue to push price higher and justify the move higher. All right. And of course, if that takes place and we see the yields dropping, that is at some point going to have an impact on the indices and potentially end up pushing them higher at some point, right? We'll see when that takes place. It's not the case right now, especially ahead of April 2nd, which has a lot of news coming out. That's the thing when geopolitics is chaotic and things are really being impacted, and there's a bunch of new announcements and adjustments and changes that take place. A lot of times the market's going to have a hard time gauging, what it truly wants to do, right? And there's a lot of uncertainty, so that's all being priced in, and we're being witness to that, but that's where the skill in terms of technicals comes into play. If the fundamentals aren't really in alignment and things are not really deeply showing clarity as far as the relationships are concerned, that's when you fall back on your ability to analyze current price delivery technically, and you just justify things based off of that. The highest probability, the best conditions are when things are symmetrical, though. Again, that's not something to be fearful of. If it's not symmetrical and there's a crack in correlation, again, you just go back to the rules, right? You drop your risk. You have different risk parameters for specific outcomes, right? Or specific conditions. And there's a reason that we do that, because most times we blow our account are in times where price is consolidated, or right ahead of a news event, or going into a rollover period that we weren't aware of, or going into a news event like FOMC, NFP, whatever. A lot of times that's where most of our issues will take place, and you have to be able to have a plan for that, because it's always going to take place, so either you don't trade it and you sit back and use those times as study times, or you go into things with a specific risk parameter adjustment and continue to be confident through whatever price gives us, because you're rooted in your risk protocols, and you have a plan for these things. All right, so yeah, that is the assumption for this. Okay, if we look up here, prices delivered through that pretty aggressively. And again, if the low down here is violated, that's in conjunction with the weekly fair value gap and stuff like that. So if that was to be violated, okay, that changes the overall state of delivery for me, and we start continuing to see downside here, and that should end up translating to something in this going higher as well, doing the reverse. But again, until that is proven, we're in consolidation. So we're going to make sure that we keep these observations in mind and adjust when necessary. But we're going to just continue to favor what price has been currently showing us until proven otherwise. And that is, continued upside delivery and then continued downside delivery in the yields. So 30-year has relative equal highs on monthly. Let's go check that out. Year has. Are you talking about these highs here? On the monthly, strong pull as well, and respecting lower fair value gap of November. So there's not really much of a fair value gap from November. September. Are you talking about here? September, January of 2024 or 2025? There's this fair value gap in here. Maybe you're talking November 2023. Oh yeah, right here you're talking about. Yeah, so drag that out. I mean, that's another layer, right? Another layer of, support as far as, if we see price, if it does want to go higher, you can layer that on top for a higher time frame analysis in terms of that. So yeah, that's a decent level you can look at and use to justify. You can also use this one, this more near-term one as well. You can also see volume imbalances in here, right? So that's also holding price. So again, if it wicks down here, all that stuff that you just pointed out, it's just further justifying the fact that there may be a sustained buy side delivery. Couple that with the fact that, we have this fair value gap up here next to a high. This is the current month's high. So if we close like this and leave this as well, and price does continue to support buy side delivery, all that stuff that you mentioned right there is pretty much a further justification on a more long-term basis if we do continue to see a protracted delivery to the buy side. Obviously, because it's the monthly time frame, it may take a little bit of time, to be able to deliver something sustained to the buy side. But if you start to see that is in place going into the next weeks and months long term, if you continue to see sustained price delivery to the buy side, it's going to be a beautiful lesson as far as the importance of higher time frames and how understanding the higher time frame delivery and the importance of it, it'll allow you to see how higher time frame analysis can lead you to longer term narrative trust, right? So you'll know it's just another factor behind you not being able to become a victim to flip-floppy behavior, and if there's a retracement lower, but the higher time frame monthly chart is still favoring buy side, you'll be able to position yourself on that weekly and daily chart all the way down to the lower time frames in shorts being short term in nature, and then when buys come, you'll be more confident that is in fact the actual narrative on the higher time frame. So then again, that's a way you can adjust your risk protocol. Maybe all shorts, if this does sustain and continue going higher, maybe all shorts can end up being the opposing delivery. So you cut your risk. And then buys, until proven otherwise, will be the time when you place your actual risk exposure on, So, and then again, if it continues to support this idea we just mentioned, that being the higher time frame, access support, and maybe we see this go higher, again, you'll be able to hold on to a narrative longer, because narrative and bias are different, right? I'm the only one really that classifies them differently. ICT doesn't do it that way, but this is what has helped me understand how to navigate retracements inside of, like a monthly bullish trend. If I go to the weekly chart and I see a down candle taking place, or the daily chart, I see a down candle, I'm able to then separate narrative on the higher time frame, which may be bullish, with bias that may turn from bullish to bearish because of retracements and consolidation, right? So then the bias inside of the higher time frame bullish narrative, if that's what takes place here, bias can be fluctuating. So then I can understand, okay, the bias is bearish inside the bullish narrative on that monthly chart. So all my shorts will be at half risk or dropped a little bit lower until we get back in line with the higher time frame narrative. And the narrative doesn't change day to day. Bias does because of consolidation and retracements inside that larger narrative. So I don't know if that is helpful to others. I know it's been helpful to me because I like to trade counter trend ideas. I like to be able to frame out reversals and different opposing views. You know what I mean? And it's helpful to me to be able to split them so that when I do want to frame out a bias, I never lose sight of the higher time frame narrative. So the thinking psychologically allows me to be rooted in that larger view without forgetting that larger view when I'm trading on those lower time frame counter trend ideas, right? And that's something special to me, right? That's the way that I view things. It's something that I personally adjusted to make things make sense for me. Doesn't take away or diminish anything ICT teaches. It's just one of those adjustments in my own personal learning and journey that has helped me understand things a bit further, so then I can participate in counter trend ideas and make sense of them, but I don't lose focus as far as a higher time frame narrative, right? Because I was doing it the other way, right? Thinking that there's no difference, which, ICT teaches that there's no difference, it's just a way to classify things differently it helps me, and, all right, good. I'm glad that it makes sense to you, brother. Just one of those things that I did for myself, and then I've also seen it helps students as well get a little more comfortable, build a little bit more trust in, being able to frame out different directions, right? Counter trend ideas, while still understanding the importance of that higher time frame narrative and how that doesn't change. It changes only if something dramatic changes, but bias can fluctuate. Just one of those personal things that has helped me. So I'm glad it makes sense to you, brother. But yeah, so we'll keep this stuff in mind, right? We got this fair value gap in here on this monthly chart, volume imbalance, right? We got these things over here that Fritz mentioned. And then, of course, we got the new week opening gap. Again, we have that monthly high, current monthly high, and then we have that current monthly low. Previous monthly high was taken. There's another one that's in close proximity to the current monthly high. So we'll see if price does want to continue. Again, that's something that we will have labeled. I think I already have it labeled, to be honest. Yeah, current monthly high. I also have an observation with the wicks here. Again, if we don't break down below these lows here, I will continue to want to see price go higher. And that's what we will stay locked into. And then, of course, the opposing view is true for the high up here, with us continuing to favor price potentially seeking sell side, unless, of course, that high is broken and we get a displacement up there. And then, of course, that would change us from bearish to bullish for this market. And that should have an impact in the DXY. And then if this changes, it can also have an impact on the indices and the foreign currencies. Right, so I want to see if that will continue. So I hope that makes sense. Fritz said January has respected 50% of October's 2023 bullish order block. Bullish order block, talking about right there. Yep. And bullish order block is October wick strong rejection idea. Is October wick. Talking about this wick right here. Is that October wick strong rejection idea? The January wick here, I mean, this is somewhat of a pretty decent delivery. So I'm thinking that, this is, you've been paying attention to the wick behavior, right? So I'm glad that you mentioned that because it's so important. If this continues, think about it. If we could stay above these levels here for the remainder of the month and we can continue to see buy-side ideas, the wick is absolutely important, right? This wick here showing this run higher, that justified or was a reason to justify this run to the buy-side here, right? So, yeah, I'm glad you've been paying attention to that. But, yeah, that's a good signature. Again, we're going to want to see if price is going to continue to stay above these levels, right? And of course, if we go to this weekly chart, we have our validation and validation levels. Validates if it stays above for buy-side delivery. And then, of course, this shift in market structure after taking the sell-side liquidity here, this may end up being the YouTube model delivery for the run higher here, right? Of course, this wick too, the balanced price range observation, right? This up wick mixed with this fair value gap, you could see prices beautifully respecting that. So unless that changes and violates, we're going to continue to assume that this is a balanced price range. And it's going to act as a discount array as well to add to our 3 PD arrays to validate this continuing to go higher from this time frame. Right? So yeah, if all that stays intact, again, yields, I'm favoring price wanting to seek sell side, supports bearish DXY. And if the bonds continue to rage higher, that should ideally support price running higher for the indices in some capacity. Seasonality is also bullish for March. I haven't really been able to see that much in the overall indices. But yeah, we'll talk about the indices when we get closer to them. But yeah, so downside yields, bullish bonds is what we're going to walk forward with in terms of this asset, right? And you guys saw our validation and validation levels. So moving on to the currencies, all right? So we can see, let me clean this up a bit. All right, so we could see how we have a fair value gap in here. It's the first thing that jumps into my mind. We got this up wick right? There's a pretty strong rejection from the midpoint of that. And we also have this inversion fair value gap too, or this reclaimed or reused fair value gap, whatever you want to call it. We're inside of a bullish uptrend. It's been really, really bullish. We have now topped out a bit, right? I would prefer to see price decline if we're looking at this weekly chart. I'd like to see it decline into this fair value gap, and then I'd like to observe the behavior from that fair value gap, right? If it was to decline down to there, we'd sweep out this previous week's low, because it's a weekly candle, weekly range, right? These are weekly highs and lows. Price swept out this previous week's high last week, and now it started a slight decline because it took out buy side here, as well. That's external range liquidity because we're running higher. So now it's reasonable to anticipate, because this high here is formed, which is a fractal high up here. You could see fractal high. It's reasonable to anticipate this now looking for internal range liquidity before it wants to run higher now, right? So the risk of this retracing, if we're trying to force buys and just get in because it's going higher, is extremely high for price to want to go against us and then reach into this to eventually, potentially run higher, right? Because when external range liquidity is taken, your eye should go into the internal range that was created, right, or is being created. Because price goes from liquidity to inefficiency. Then it goes from inefficiency back to liquidity. Okay, it only does those things, or it will consolidate, right? So we're either attacking some form of a higher low. In this case, it attacked a high. You can make the argument that there's a premium array up there, whatever. But once it fulfills that, the next mode of delivery is either going to consolidate because it took those levels out, or it's going to retrace to a gap of some kind or a discount array of some kind that's available to us, right? It only does those things, okay? So when you're thinking of bias and narrative, right, you want to think about that, right? Where's price went to? Like, where are we at, right? Did it take out a high, or did it reach into a fair value gap or some PD array, right? In this case, it took out a high, right? So because it did that, took out external range liquidity, we now want to observe an inefficiency or a discount array of some kind. In this case, we have the previous week's low coupled with a fair value gap in a trend that's been going higher. So for this, you can also see the wick here. We've hit an opposing PD array. So we've taken out external range liquidity and we've hit a bearish PD array. So if you guys remember from the last couple of weeks, I've talked about counter trend ideas. We're in a bullish trend here. If price is going to continue going higher, I'd like to see this reverse, hit an opposing PD array here, internal range liquidity, after we've swept external and we've hit a, and we've hit an opposing PD array, opposing to this buy side delivery, and it's stalled out, right? So because that scenario has taken place, I would like to see, price retrace in some capacity, right? So that means we are in a framework or a condition where counter trend could be identified off the opposing PD array after external range liquidity was taken, right? So that's being considered. It's reasonable to now have our eyes on this fair value gap going into the next week. It's been extremely bullish throughout the month so far. It's only right because this monthly range has been so bullish. It's only right given the fact that we've taken external range liquidity, we've been bullish, and now we've hit a premium array opposed to this upside trend. It's only right that we look for internal range liquidity. Now, that may not take place. It may just continue to rage higher. That's fantastic. Okay, I don't care. Okay, this is what happens, right? This is how price behaves. It goes from external range liquidity. It goes from PD arrays, right? In this case, bearish PD array, pushing price down to an internal range liquidity pool or some kind of internal range PD array, right? That being an order block or a fair value gap. And then if it can get down there and then start to deliver aggressively away from that in line with this buy side delivery, we can then continue to trust buy side delivery and then target inefficiency to external range liquidity, right? So it goes from liquidity to inefficiency or external range to internal range. And then if it can get down into that fair value gap, it'll go from inefficiency to liquidity. It'll consolidate and not do anything. But for the most part, those are the three things it does, right? And then reversals obviously can take place from opposing PD arrays on a higher time frame when price has been delivering and then finally fulfills that. When a higher time frame pool of liquidity is swept, or when a higher time frame opposing PD array is met, or if we're going into a Friday that also hit an opposing PD array on that higher time frame, that triggers in retracements and consolidation. And a lot of times that happens on Thursdays and Fridays. So that's why TGIF is there. That's more context to TGIF. Thank God it's Friday reversals, right? So yeah, I hope that makes sense. Very important. So I'm observing going into this new week, Euro's already started, right? It's already started to decline. So let's see if we can get price to want to reach down. Good day. What's up, 95.5? So very late today. It's okay. Could you say movements from internal range liquidity on higher time frames create market maker models towards higher time frame? Yes. So yeah, I'm glad you mentioned that. That's something that I talk about all the time, right? So let's talk about that, right? So let me figure out how the hell I'm going to do this. Okay, it's a very important lesson. I'm grateful that you mentioned that because Nutty Fafa, you are over the target. You're over a piece of information that literally was one of the things that changed everything for me when it comes to market maker buy and sell models and using the logic behind those to frame out the overall delivery inside of both trending environments and retracements. So say price is going like this. And this is the daily time frame. Okay? Price retracing here can be looked at, if we're in a bullish trend, as forming a lower time frame market maker sell model. Market maker sell model in that case would fail if we're in a buy side delivery, right? But this is from the high going down into some internal range liquidity, right? Maybe there's a consolidation somewhere over here that you were maybe anticipating to see price break through it. When it fails, if we're in it will fail to do that and complete the market maker sell model you've identified if price is in a buy side delivery on the higher time frame. This may be retracing into a fair value gap or an internal range order block or something, maybe a swing low of some kind. If that's the case and it blows out a swing low, a lot of times that will be a market maker sell model that was completed on the lower time frame inside that higher time frame retracement. But now when price hits that internal range liquidity, or it hits the fair value gap in here, right? For a real example, okay? If it does that and gets up in there and starts to deliver away, this high that created this retracement on this higher time frame should be classified, if you like to use market maker buy and sell models, as a potential setup for a market maker buy model continuing the buy side delivery, right? So this retracement that ends up, from the higher time frame looking like just a couple down candles into a internal range liquidity pool, like a fair value gap, swing low, or order block. Once it starts to deliver away from that, you now have your sell side of the market maker buy model situated. So you can use the data you acquire from that to help you frame out a framework to then target the high up here. Okay? And then it continues, right? Once price takes external range liquidity, starts to seek internal range liquidity, fair value gap, order block, previous high, whatever the case may be, classify the retracement as a potential lower time frame market maker sell model, right? Once it hits that level, maybe it fails to complete the market maker sell model, right? Maybe you don't want to take those trades. You just want to think about it, right? And so you can observe the next phase. Once it delivers into that internal range liquidity and you see price start to push away again, there's another market maker buy model scenario inside that higher time frame bullish narrative. And of course, that is all going to be structured delivery towards a higher time frame PD array, in this case for a bullish trend. All right? So all the way up to that, whatever, that higher time frame objective you're observing, all the way up to that, there's market maker buy and sell models happening on that lower time frame within that higher time frame delivery. Like, for example, this was running up to this fair value gap on the weekly chart, right? Or, this high up here, right? This is a weekly chart, right? These retracements in here, right? This retracement up to the high up here, I'll leave this to you to go watch or go observe, right? This retracement into this daily inversion fair value gap that held in price, that's a discount array. Price traded into that, giving a daily time frame retracement before it accelerated to the buy side. You highlight this area, this retracement bearish in this bullish delivery on this daily chart. You take this piece of price action, drop down to the 1 hour, and think about market maker buy models because we're in a buy side delivery. Think about market maker sell models as it's delivering to the sell side, right? And if you can see it fail to do a market maker sell model, that's giving you further confirmation that price is going to continue to run higher. Market maker sell models, for the most part, overall will fail to complete the original consolidation delivery in that market maker sell model if we are in a higher time frame bullish delivery. Market maker buy models will deliver. Okay? In a downtrend, market maker buy models will fail. They will just be retracements to premium arrays, right? And a lot of times, if the market maker buy models fail in a downtrend, when price turns around, it's now creating a market maker sell model towards that higher time frame downside objective on the higher time frame. Now, what I just mentioned to you right now, okay, is one of the most powerful things in the market maker model understanding. Okay? Majority of people don't understand what I just mentioned. And it's unfortunate. Some people will know market maker buy and sell models and they don't even realize what I just mentioned. A lot of people do realize it, and that's why they fall in love with market maker buy and sell models. What I just mentioned is why I fell in love with market maker buy and sell models. That's setting aside the fact that, on the lower time frames, you could find market maker buy models and sell models happening continuously within the same context of what I just described on this daily time frame. But when you're on those lower time frames, like the 1 hour retracement lower, can have 15-minute and 5-minute market maker models happening all through that 1 hour retracement, right? So, and then of course, when price delivers away from that 1 hour delivery, going to the buy side, market maker buy models will kick in on those lower time frames inside that 1 hour buy side delivery. So what I just mentioned may go over a lot of people's heads, okay? It's a very advanced perspective in terms of navigating market maker buy and sell models to justify particular price action at a high level in terms of navigation on the higher time frame to lower time frame. But it's the essence of why market maker models are so powerful, why I am obsessed with them. Although I learned about market maker buy and sell models in 2021. I started trading towards, kind of like the end or middle-ish portion of 2019, right? So all of that time passed, right? Like a little bit over a year passed. And then once I discovered market maker models, literally from that point on, things totally changed dramatically. Okay? It was, I can't even describe how insane it is. But if what I just mentioned makes sense to you about market maker buy and sell models, it changes everything. It really does. It's what I'm grateful that Nutty Fafa has discovered this. He's a young guy, and I'm telling you, bro, it's incredible. It's absolutely incredible. It's going to change everything. This discovery was a breakthrough for, yeah. I'm telling you right now, it's going to be probably the biggest breakthrough that you'll come across in trading. It's incredible. It really is. So yeah, you, my friend, are absolutely over the target. Press in as hard as you possibly can with what it is that we just talked about, because it's insane. It really is. And that's the thing. ICT has mentioned a couple of times that we are always in a market maker buy or sell model framework. Always. Always. 100%. It never fails. Even in consolidations. Because when you go to that lower time frame, there's market maker buy and sell models attacking the extreme highs and the extreme lows. We're going back and forth from one to the next. That's why if you've observed the market maker model description, or the videos ICT mentioned, he said it's a universal trading model. Right? It's a universal trading model because when you go to those lower time frames, if the higher time frame's consolidating, we're going back and forth, delivering market maker buy to market maker sell, market maker buy, market maker sell, attacking the extremes of the highs and lows. And then, like I mentioned, higher time frame daily chart bearish retracements, think market maker sell model. If it fails, even if it fails, you could still trade it in that capacity, reaching for internal range liquidity, right? Like this delivery here, maybe there was a consolidation down here, or maybe it was up here a little bit, right? And you spotted a consolidation. When price retraces, think market maker sell model. If price responds aggressively to the buy side like this, market maker buy model, aiming for the high. And then all throughout the delivery in there, there's continuous market maker buy and sell models taking place. It goes back to the thing that we always hear people talk about, the fractal nature in price. And market maker buy and sell models are insane. There's a reason ICT says out of all the things he's taught online, the one model, if he had to decide to pick one that's the closest as you possibly could be to the way he actually trades, it's the second stage distribution of a market maker buy or sell model on every time frame. And that's all he would need. And it's true. What I just mentioned provides evidence as far as why that is the case. So Nutty Fafa, I'm grateful that you mentioned that. Because guess what? There's nothing that can outmatch that understanding. Nothing. And you can even use market maker buy and sell models for framework, for bias and narrative confirmation, if you want to continue to use a different model, and you like whatever else that you use. It could be just like how trading can be positioned for any person's schedule. If you work a full-time job, if you do whatever, you have swing trading and these other ways. Same thing with market maker buy and sell models. If you're a scalper, a day trader, a swing trader, it doesn't matter. It could fit anything because it happens on every time frame, all the time, continuously. And again, we are always in a market maker buy and sell model, right? Or sell model, my bad, right? It's incredible. And if, I highly advise those that haven't watched my market maker model video I posted on this channel. I may redo it to add a couple more things, and maybe make the presentation a little better. Some things I wish I would have included, but for the most part, there's a lot of things that we discussed just now in that video, so you can get even further understanding. And now, of course, every time I'm on the chart, I'm always thinking market maker buy and sell model. Which one are we in? Because once I can gauge that and I can put that in alignment with either the retracement I'm seeing or the consolidation, reversal, or expansion I can see on the higher time frame, price does not get by you. It can't escape. It's one of the most lethal, one of the most lethal weapons I have in my repertoire. And I press on this aggressively with my one-on-one students, aggressive, because it goes even further than what I've just mentioned, but I mean, it's incredible. It really is. Tony said, it's life-changing, starting to become profitable. I'm grateful to see you always hopping on I'm grateful that you're continuously getting value from this, because that's why I do this. You know, even if it was one of you guys watching me, this stuff is so powerful. Just to see one person light up and change their situation or fall in love with this even further, you know, it's worth it to me. It's not about money to me when I'm doing this type of stuff. It's not, you know. Now, if it comes to like one-on-ones and, you know, super involved type of mentorship, yeah, I think it's reasonable for someone to think like, hey, like it's a lot of work to teach somebody one-on-one, because you got to iron out their issues and personalize things to the way they understand. It's a lot of work. You know, that's why most people don't offer it, but I do, you know, because I truly want people's lives to change, you know. And of course, I do it in a group setting too, to try to impact as many as possible. And, you know, it's pretty effective in that way as well, because a lot of people deal with the same problems. So there's a lot of very similar situations or similar topics and tactics that can help people improve, you know. But there's always, you know, that small group of people that require that extra hand holding. And I'd feel selfish if I didn't at least offer it, because I was requested literally for months nonstop by multiple people to give one-on-one opportunities. And I felt bad, you know, because I remember when I needed that, and I was just like, you know what, why not? You know, why not offer it? You know, for those that are willing to make that investment in themselves and me as a mentor, you know, why not? You know, again, it's not for everybody, obviously. But yeah, that option's always there, you know. But yeah, so let's see what you guys are saying. So on the 4 hour, let's see. So on 4 hour GBP, whoops, let's go to GBP real quick. All right, so on the 4 hour GBP, we have a possible stage set for second stage distribution towards the original consolidation, which are equal lows for 6th and 10th of March. Let's see what you're talking about. 6th and the 10th of March. Yeah, that's a good observation. All right, that's a decent observation there. It's probably a little bit more apparent if we went to this time frame. Something you can look in here, which kind of goes back to what I was mentioning. This run higher with price looking to target this original consolidation equal lows and fair value gap. This whole movement, if you keep dropping down in time frame, will provide you evidence of a market maker sell model just to trade below these equal lows and press into this daily bearish order block. And if it was to continue to rally higher, guess what? This consolidation up here becomes an original consolidation to continue to push price higher in a market maker buy model capacity. And if that was to fail, say it reached up into this and failed and then started displacing lower, guess what? The failure of that market maker buy model to deliver off that higher time frame buy side delivery, the failure to do that and complete the market maker buy model provides evidence and trustworthy understanding that this low will probably become a victim. You know, you look at this 1 hour, if you drop down to the 1 minute, inside that overall delivery to the downside, this 1 hour retracement in here, or let's see, what time frame was that on for this little run higher, right? This run higher here as a retracement, even on this 15 minute, this retracement, if we're going to continue to see price push lower here, even this on the 1 minute or the seconds chart will provide evidence of a market maker sell model, all within that higher time frame downside retracement. So you can see, you start breaking things down and market maker buy models start popping off the chart all over the place. Market maker buy and sell models, just everywhere. They're literally everywhere. You know, depending on the time frame you're looking at, obviously, you know, me saying this can make people get overwhelmed, right? But again, work on things in the context of what makes sense to you and how you trade. You know, if you don't trade the seconds chart, cool, stay away from it. Just use it in the context of, whatever time frames you like to operate within. You don't got to worry about all, it's just like, you don't got to worry about all the concepts. You don't got to worry about every single opportunity that's provided. I say these types of things to students to show you there's never not a lot of opportunities. Okay. There's never a situation where you can't come up with an idea. A lot of times there's an experience gap. There's a information gap that's not there, that you're not exposed to yet. And it's not something to beat yourself up about. And if this was a little overwhelming for me to tell you guys, for those that haven't really spent much time with market maker buy and sell models, be patient. Don't force yourself to think I got to understand right now, because you don't. I've been trading for a long time at this point, half a decade. Okay. So it's been a lot of time. And I've been doing market maker buy and sell model studies since 2021. So it's been a long time. And my private Discord, with my private community students, you scroll all the way back up, you'll see just how long I've been using this stuff. And that was before it was even a private community. It was just a normal community. So, because I had to know what the hell I was doing before I start teaching others, right? It's how people should think. If you can't do it yourself, why the hell are you even opening your mouth? It just blows my mind, to be honest. But yeah, right? So if you're on the 15-minute, right, think these retracements on the 15-minute view, retracement higher to go lower, think market maker sell model on the 1 minute or the seconds chart, right? Same thing with this, right? If we see a decline here on the daily chart, right? Maybe it's aiming for an order block. Maybe it's aiming for a swing low, right? That drop can be framed in terms of market maker sell model. And if we can get a delivery away from that, back in line with the buy side delivery, the buy side narrative, we start to think, okay, 1 hour should be able to set us up with a potential market maker buy model, right? Like I mentioned, the decline here, this whole framework, right, could potentially be framed as a market maker sell model, right? Maybe it's this consolidation that turns this to a market maker sell model, right? That's one way. And if you look at this low, if we do get down into that low, right, like Fritz said, I think it was Fritz, yeah. Like Fritz said, on the 4 hour, right, we may be able to see this if it does choose to get down into this level. There's a daily order block here, which is why it may not be able to get down there. But if we were to see it get down to there, this whole situation may deliver us a market maker sell model too, right? But even in the context of that taking place, you go to the 15-minute, you could start to continuously find more framework to break it down. But again, and find more market maker buy and sell models. But like I said, it just depends on what you see, right? If you're looking at the 4 hour, you can definitely have that perspective that, this may continue and create this as a market maker sell model framework. Now, if we stay below this consolidation or accumulation area, drag that over and it stays below that, right? Maybe it stays also below this situation here. Again, that could be the case that it has a quick delivery to the fair value gap in here and be a second stage distribution, right? So let's try to observe and see if there's more of an argument we can make for that. See, if this daily bearish order block or daily bullish order block wasn't there, I'd be like, oh yeah, for sure. But, this could stop that from being the case because the 4 hour is subservient to what the higher time frame daily chart's doing, right? So if the daily time frame's hitting a daily objective, if we're looking at something taking place on the 4 hour in terms of targeting, it may be overridden by the delivery and the delivery from the PD array on that daily chart, right? So this may stop it from delivering that, and this may have just been the delivery to get us down below these equal lows. This was a market maker sell model. Sometimes they're really sloppy, right? So, it's not always going to look perfect, but the delivery is going to still be there. If we went higher to go lower, you want to think market maker sell model. If we're going lower to go higher, we want to think market maker buy model, right? And of course, as you drop down in time frames, all that delivery from, the retracements to continuations, you can still frame out lower time frame, more lower time frame market maker buy and sell models. how do we add PA on the weekly to the PA price action? How do we add price action on the weekly to the narrative? How do we add price action on the weekly to the narrative? I'm not sure exactly what you mean, but how do you, yes, the weekly fair value gap. How do we add price action on the weekly to the narrative? So are you talking about how do we navigate the weekly perspective on to the lower time frames, like navigating that time frame to time frame, expecting the pull back to the weekly fair value gap before going back up? So how do we, are you essentially asking how we navigate this delivery to the weekly fair value gap? Oh, so yeah, you were talking about the because I said the order block may stop price on that 4 hour. Again, the daily chart is also subservient to the weekly chart. So again, this may be the case. This is, what I was mentioning. I'd like to see this take place, right? But because of course it's Sunday, right, when price opens up, we can't know for sure if that is going to reach down there. It's also kind of respected this wick so far, right? So that daily order block I just observed, right, it may hold price. If it does hold price, then that'll also show on this weekly chart that the wick here also held price and will push it up. The weekly perspective here, I'm assuming is going to reach down to this fair value gap, right? I'd like to see that take place. But if it doesn't, again, if we go to the daily chart, we can see that there's also an order block, right? So that may push price higher. Of course, if you look at the 4 hour, right, you can also paint that picture of the potential market maker sell model. Again, this 4 hour delivery, because we have that weekly fair value gap that may get reached into, yeah, it may deliver. There's no 100% assurity until we see the open price that comes out and how price is going to deliver for the week, right? And so, yeah, it may use this to complete it. But because, again, there's this daily order block here, if that stops price and starts delivering it to the buy side, that would mean that this sell side down here may fail. This is also a weekly wick down in here, right? So there's some things that have to take place. Overall, the overall understanding and idea I want to see going into this week, I want to see us reach down to this weekly fair value gap if we can. And if that's the case, then again, you can frame this out like you mentioned as the market maker sell model, right? But there's some things you also want to consider. This daily order block, is it going to hold that? If not, right, we don't have to be perfect when it comes to market maker buy and sell models. We don't have to catch the start to the finish. A lot of times, for the most part, most times, you're going to catch it towards the end, right? And as long as you can identify it before the second stage distribution takes place, and it makes sense within the higher time frame narrative, you're able to start painting a picture and participate, right? But yeah, we'll see. The overall objective, getting away from the market maker buy and sell model topic, for me, as far as what I want to see price do, I'd prefer it to reach down into here. It doesn't have to do that, obviously. If it does, though, what Fritz said, as far as us potentially framing out this retracement to this fair value gap, piece of that context could be the fact that this could be a market maker sell model in here to deliver price into that. And then once, of course, we get down into here, if we get a displacement higher from this weekly fair value gap, you could then go from the market maker sell model that set up this weekly retracement. You could turn that into potentially a framework for market maker buy model coming back up and seeking out the buy side liquidity. Right, so I hope breaking down the overall perspective. I'm sorry that it confused you when I mentioned the order block may stop price from going down there. It's just an observation we got to keep track of, because just in case the weekly fair value gap down here fails, which could happen because it's Sunday, we don't know what it's fully going to do, if it's going to reach down there or not. Ideally, I'd like to see that, right? Given the fact that this fair value gap should be able to be reached into, because on that weekly chart, we could see that it's wide open, right? It has not reached down there on either of the currencies, right? So yeah, I'd prefer to see that take place, right? And of course, if it does, then, like you said, Fritz, you could reasonably observe it as a market maker sell model. The framework on those lower time frames that are telling the story as we move up to the higher time frame PD array, right? And what it's reaching for on this time frame. We're still inside the overall bullish narrative, right? The narrative is still bullish, but this may give us a retracement, right? So the bias may change until it gets down into here. And like you mentioned, you kind of pointed out a good example of how, this higher time frame narrative may reach down to this weekly fair value gap. So if you go to the 4-hour, you may see a market maker sell model to set that up. And then once it hits that higher time frame level, given the fact that the narrative is still bullish, we may be able to adjust and kick back into a market maker buy model situation when we go back to that 4-hour or even 1-hour time frame. And all throughout those time frames, the more you drop lower, as long as you're rooted on the higher time frame, you could reliably pull out multiple market maker buy and sell models depending on the kind of trader you are. News and manipulation could also mean an aggressive wick into that fair value gap and confirming order block as having been respected. Which order block are you talking about? Are you talking about the daily order block here? I mean, yeah, it may wick down into there, right? It may wick, the news may pump that into it, right? Because remember, the news acts as a macro for the higher time frame delivery. So this delivery into this fair value gap in here may end up being maybe the result of the news coming out this week, right? The news may push us down into there. It may end up being just a bearish week next week, right? Because remember, this is the weekly chart. So the next candle is going to be one candle. The next week may be a bearish week to get us into this weekly fair value gap. And then maybe it closes down there. And then the week after that, going into the new month, that may be a time where price then decides to want to run back up into the buy side direction. Or, like I mentioned a second ago, this daily order block may hold price. It may refuse to want to come into this level, leave that open, which in itself is a very strong bullish indicator, which would then have us really ramp up to the buy side. All right, perfect, Fritz. I'm glad it makes a lot of sense, brother. That's why we're here, right? It says in the bio for the YouTube, it's to basically turn confusion to clarity, right? So I hope that, your guys' experience with me has been helping you acquire that, because all the time you guys spend here with me, that's the goal, to get you from being confused, not knowing how things piece together, getting you from that state of mind to clarity so then you can end up walking on your own. I think that's a better gift than you coming here receiving signals 24/7, because I'm teaching you to be the sniper instead of, having to get someone else to assist you with the shots every time, because that's not fun. It may seem fun for the lazies out here that just want everything given to them. But I mean, this is giving you something you can use for a lifetime. It's just me passing the blessing on. And for those that listen, those that pay attention, those that show up and hear me out and actually are dedicated to this, you see the value. Like you guys that are with me right now, you guys have been seeing the value. You guys have been applying the things you've been learning from me. And of course, ICT can never take away from him being gracious enough to hand us his stuff. But for the most part, I hope your guys' time with me has been providing fruit. It's been giving you clarity. I know Nutty Fafa has been telling me he's been seeing some breakthroughs. I know that Tony has been showing some breakthroughs. I have a couple of students in my private community just in the last couple of weeks that have been really crushing it, both in funded accounts and private their private accounts. So it's all around freaking destroying things when it comes to the market makers. They can be real upset in a year or so. I prefer to be taught how to fish so I can feed myself. as opposed to being handed food. Yeah, that's a fact. They say that if you allow someone to feed you, you also give them authority to starve you. You know what I mean? And that statement obviously is portraying the fact that, it's better to get taught the skill rather than come and expect someone to do it all for you. Because if something happens to the person that you're expecting to feed you, you're going to end up starving and moving on and quitting and, doing things that are totally a waste of time and unnecessary. It takes a while to learn this stuff, but hey, it's well worth every minute we spend. So yeah, that's my assumption for the overall currencies, right? So we went to the bonds, yields, currencies. I'd like to see us retrace. If it does look like it wants to reach down here, that may be the set overall view for the week. It may just look to retrace and dig lower. And then once we get down into this fair value gap area, we would then decide whether price is going to want to run higher from there, in which case we'd be able to get in line with that and adjust to that if that is what takes place. All right, so yeah, I hope all that makes sense. Because we've hit this wick here and we've given a pretty strong rejection, that may be the trigger or catalyst for price to want to reach lower. For price to deliver down into this fair value gap, we're going to obviously use the news to see if we can get in front of that, or use that news event for institutional sponsorship to maybe get down into this level. If that fails and maybe the wick here stays intact and price just continues to rage higher, obviously we have a daily order block to work off of as well for framework, and we could just continue to press higher until proven otherwise. I wouldn't be surprised though, given how aggressively bullish we've been, I wouldn't be surprised that this ends up reaching into here though. I'd like to see it do that, right? So yeah, especially if the bonds are going to go higher. If they're going to continue their rampage to the buy side and leave these areas open, that supports this being pretty interested in buy side delivery. But again, it's not unreasonable for them to want to retrace. I'd ideally want to see them do that so that we can position ourselves in regards to that. We got previous week's lows here, 2 of them. So those are also the first near-term targets, previous week's high and low. The week before last week, right, that's this candle, that high was taken. We have that low available. That liquidity is mixed with this fair value gap here, right? So price declining into this weekly fair value gap, the first target would be, first of all, Friday's low, Friday's high and low, right? It may use both of those. But before it gets to this weekly fair value gap, we could frame potentially a setup that reaches down below these previous week's lows on our way to that level. And then once we get down into this level, if that's what takes place, we'll see the response. If it pushes away, then we can adjust and navigate through that as well. But yeah, I think it's likely that we'll potentially reach down into there for both GU and EU. There's a reason for that, right? It looks like it's already started too, so we'll see if that continues. All right. So now moving on to the DXY. All right, we'll try to fly through this. I know you guys have been here for a while. But yeah, so if we do see the bonds go lower, or the yields go lower, right? If that's what's going to take place here in this market, that supports us, given this retracement, to then go lower. I was calling for this retracement well ahead of time, well before it happened. And as you guys can see clearly, that's what took place. What happened? It took out external range liquidity, right? Changed the overall state of delivery. And now off the lows there from a monthly fair value gap, that's an opposing PD array, opposed to this downtrend. Price hit that, chilled a little bit in there, but then it reversed back, doing what? Taking external range to then seek internal range. So now we've delivered into internal range liquidity. We'll see if price wants to come deeper into that. I wouldn't really want to see it do that if we're going to be like extremely weak or interested in sell side delivery. We still have the rest of this monthly fair value gap to reach into, so I'm assuming that at some point we'll see that take place. We have this large candle up here, right? This large fair value gap merged with this large down delivery and fair value gap to the downside. So buy side and sell side overlap one another. So that means with that being in place, it should not really need to get back beyond the midpoint of this. So if we do start to punch higher through that, that is a lot less interesting and convincing that price is going to want to go lower, right? So I'd like to see us continue to show evidence that this fair value gap, the upper portion of it beyond the midpoint, is going to stay respected. We also have this monthly fair value gap in here too, overlapping that balanced price range idea that I just talked about. Okay, so we're going to keep that stuff in mind to justify price continuing to go lower. Now, if that does not hold in price and it refuses to continue to be interested in sell side, then we will see price continue to target buy side, and we will adjust as that takes place. Currently, at the moment, there's no reason to think buy side delivery is overpowering the downside delivery, right? Tariffs are coming. April 2nd is coming, so that's why we see all this downside delivery in the U.S. markets. So these are the levels that we're going to watch to see if they continue to justify downside delivery in the DXY. Okay, and if we do see price deliver to the downside, we have previous week's high, previous week's low, equal lows, right? Fair value gap on the monthly, and a little bit more of this fair value gap here on this weekly chart. All right, we have a little bit left open there. So we'll see if it wants to come down there. We've broken lower. We are at a discount given the overall range extreme. But again, we have this overlapping fair value gap, overlapping fair value gap here too. Monthly fair value gap that should act as an inversion inside of a pretty much aggressive down delivery. Seems as though, hopefully the yields are going to support that as well. If they continue to support that, guess what? We justify price continuing to go lower here in the DXY, and price is justified in us continuing to go higher here. We just may see a retracement to the downside for the foreign currencies. That's in conjunction with this retracement to the buy side for the DXY to then try to seek sell side again. But again, the targets we're observing right from the start of the week is the high here on this candle, previous week's high, previous week's low. If we are going to target sell side down here, we're going to have to see this level get attacked first before it comes down to these lower levels. So that's our first downside objective given this time frame. And it's in the context of price declining to retrace, right? We're running higher as we anticipated the last 2 weeks, and prices now got up in there. So going into this week, we want to see what's going to happen. Are we going to blow it out a little bit further? Are we going to stay below this balanced price range I mentioned? And are we going to respect the midpoint of this fair value gap? If that doesn't take place, then obviously we're going to have to be patient and wait for things to fall in alignment, with a trustworthy delivery to the downside. For now, we're retracing, right? We have this 2-day order block here that has held price. All that's just in the context of building a bias for price to go higher. It's justifying the retracement here, right? So with price retracing up here, right? If we can maybe get one more candle to push us a little bit deeper, that's fine. If we do start to see a decline from there, like we talked about earlier, right? We could talk about or think about market maker sell models to then get us down into this low here, these relative equal lows, and this deeper fair value gap here on the monthly, maybe even eventually get down to this deeper weekly fair value gap, if obviously the downtrend is going to be justified and continue to be justified. All right, so line in the sand is the midpoint of this fair value gap. Okay, there is equilibrium, there is a premium up here, but again, we have this large delivery to the buy side mixed or in alignment with this large delivery to the downside. This whole area should be acting as a balanced price range. Okay, so it should not have to come through this middle portion of this weekly bearish fair value gap. We should be able to see that stay open, maybe deliver a institutional order flow entry drill on this weekly time frame for us to then try to continue to target potential sell side and these previous days lows in here, or previous week's lows. And so yeah, that's kind of my opinion on the DXY. Short and sweet. All right, so if you guys have any questions, let me know in the chat. But hopefully all this stuff has made sense so far from what I've seen in the chat, everything's been making sense, so I'm grateful for that. So yeah, moving on to the, let's go move on to the 3 indices. Let's go to the weekly chart, take this off. So yeah, we're seeing price deliver through a large down wick here. We do have a fair value gap up here. So if we do start to see price want to gravitate a little further to the buy side, to reach maybe for this volume imbalance, right? The midpoint of this wick, right? It's holding. So we're also seeing this one hold as well. So we got to go into next week seeing if price has an interest in retracing. Now, if the DXY was to decline, right, and it's, you know, going to use this retracement to attack further sell side, that's going to have my interest in price coming up to the buy side in here, maybe digging in a little bit deeper to give us a bullish bias short term inside of this larger downside delivery. Okay, then we could frame ideas towards that as we continue to observe the interest rate markets and how things are going to transpire to finish the week or finish the month. Right, so yeah, if price does end up aggressively punching through this high here, I obviously, in conjunction, like to see the bonds also decline and rapidly destroy the sell side. And then I'd like to see the yields rally as a result of that as well. Excuse me. All right. But yeah, we'll see what happens there. Right. There's been, obviously, between the interest rate markets and the indices, there's been a correlation issue. So we'll see if that's going to continue or not. But yeah, it's not unreasonable to anticipate this doing some type of retracement. We're in a consolidation, right? We're at a time where higher time frame levels have been met, overlapping candles, still in the week after transition of the quarter. So again, you know, there may be cracks in correlation that continue. There may be symmetrical problems that take place. For the most part, we're still in a downtrend. Nothing has changed until multiple PD arrays get violated to the buy side. All right, so we'll continue to observe that, right? We have this wick here. So we'll see if price wants to respect that. Again, if we go to the weekly chart, we have this volume imbalance in here, which is a new week opening gap as well. So maybe price wants to get up in there, right? Now, I'll tell you on this weekly chart, if price was to violate this fair value gap, I would be done looking for shorts, right? We would, you know, potentially start to change overall, and you know, price may want to maybe even target these levels, you know. So yeah, I wouldn't be surprised if there's a retracement that comes in this next week, and you know, we blow out the highs, get up into this level, and then however price behaves up here would determine whether we're going to see a more protracted downside delivery. But again, it can go either way here. It could respect the wick here and this fair value gap, which we are currently doing. Right? It's definitely respecting this. It's also bouncing off a bullish order block. Right? We have relative equal highs up here. I believe there's also SMT at the highs. So that's also justifying the fact that price may not want to go further. Okay, so going into this new week, we hold a light bias. Narrative is still bearish, clearly. And we're moving into the last week of this month. So, you know, we're in a particular scenario where you can make an argument for either side. You know, yes, we favor the higher time frame downside delivery. So we're in a downside narrative. But we're at a time of the month, and we're at a period of transition from one quarter to the next, and we're seeing consolidation, and the bonds and yields are stuck in a range, okay, which determine a lot of times what price is going to do, right? Plus a crack in correlation overall, right? With the bonds moving higher, with the indices aggressively dropping lower, right? So we need to see some things work out here, you know. But again, we have an argument for price to want to come up here and retrace in that higher time frame downtrend. But then we also have the argument that, you know, there's an SMT at the highs, so price may want to reject that and start to press lower, right? If price was to run up and violate the highs, we have to observe whether price is going to continue to support that. How will we do that? If price gets above this order block, we need to see the delivery when price reaches back into it, because if this order block is going to hold, if we violate this high, that would justify a target being bullish short term. If price was to reject this and start going lower, obviously we're still in alignment with the downside and we'll target the lows, previous week low. Right? Maybe price gives a wick, violates the high here, then gets right back below the midpoint of this bearish or bullish order block. That would also justify our assumption that price is going to continue to target sell side. Maybe it'll come and target the equal lows here if that was the case. But yeah, those are a couple scenarios. We're kind of at a 50-50 point because we're in consolidation, and then all the other things that I just mentioned. So we're going to have to see how things play out. Narrative overall is downside. So we're going to favor that until proven otherwise. So if that doesn't take place, right, if it starts to violate the highs here, then our eye goes directly to this order block and how price delivers from that. And then in that case, we would then use that as a framework to then try to target something up here, right? And again, if that fails, right, maybe it wicks through it and gets below this order block, or maybe it just entirely doesn't deliver up there and starts to deliver to the downside. That puts us in position to then get in line with a trustworthy delivery to the downside. Again, we're going into the last end of the month. We're still in the week after phase of the rollover, and prices in consolidation on both the bonds and yields, along with that Kraken correlation and consolidation in the indices as well overall. Right, so don't demand too much. Given the risk factors I just mentioned, lower your risk. 1 to 2 trades a day. If you take 2 losses in a row, 2 days in a row, stop. Don't even trade the rest of the week. Okay? You just gotta do this. We're in a time period where you can get violated, and you don't want to overtrade when someone's telling you this and you're physically seeing how price is delivering yourself. Don't make things more complicated and difficult than they really need to be, and definitely don't make it more painful than it needs to be when you can simply just make the decision to wait, right? Or stop if you do end up taking 2 straight losing days, because better conditions will come. We're in anticipation for chaos on April 2nd because the U.S. is dropping tariffs on other countries, and we don't fully understand what fully is going to take place. We don't know. Nobody knows. The market will tell us eventually. Okay, so yeah, I hope all this makes sense. So we're basically done with the analysis process, and I hope that's been valuable. But yeah, let's jump into some questions here. If you have questions, leave them in the comments. Doesn't matter what it is. Is it reasonable to include daily price range to continue in observations? Is it reasonable to include daily price range to continue in observations? Example, daily range on the S&P 500 CFD has been around 60 handles, which could deliver to the imbalance. No week opening gap Monday and Tuesday. The ranging price action has been around 100 handles for the last week. So are you talking about what's that called? I think I have an indicator for that. You're talking about the average daily range, right? Gauging how large a range would be based on previous daily range amounts. Is that what you're talking about? Yeah. So, I mean, you could do that, right? You can definitely reasonably use that as an overall anticipation tool, I guess you could say. The problem is we're in a consolidation right now, right? The average daily range idea could obviously have been used for the last couple of weeks, but given the fact that we are now stuck in consolidation, things may be a bit skewed and different than they would be if we were in a trending environment. Because average daily range understanding is generally used to anticipate what the size of volatility could be in the coming days based on previous like 5 or 10 days that we've encountered. We've also moved into a new quarter, right? And we're about to move into a new month. So that stuff may fluctuate because of those simple factors. We're moving into a different time. We have specific news events coming out. We're in a volatile geopolitical landscape. So the average daily range technicality and the understanding of that as a anticipation tactic may be a bit skewed because of these factors, right? But it's definitely something to consider, right? Average daily range for forecasting in terms of how large the volatility would be. There's actually an indicator I had right here, average daily range, high-low. It's like one of those indicators that tells you the average daily range, right? And you can kind of see things have been pretty consistent overall. Been, a couple hundred, almost 200 point ranges as a whole. So if you want to use this indicator, you can pull that up. I don't really use it all the time. I just take a glance at it from time to time. But yeah, definitely use this average daily range high-low. Search that up in the indicators, and you can definitely use that. So quarterly theory. So are you talking about like the quarterly theory as in the different quarters that take place? Or are you talking about quarters theory, the thing that was taught by this guy that, in my opinion, doesn't know what the hell he's talking about? But yeah, quarters theory as a whole, in terms of like whole numbers and quarter numbers, I mean, that's all algorithmically easy when it comes to math. That's why a lot of times you'll see something quarterly, like if you're looking at the price action, the delivery from what price delivers from. A lot of times it'll be at a quarter level, it'll be at a 100 level, it'll be at a 50 level, 75 level. So that's always going to be present because it's easy on the math. Yeah, transition, yeah. Quarter to quarter, yeah. Yeah. The price nonsense. I mean, there's some validity, I guess, because they talk about, the 50s and the 70s and, the 100 levels, There is some validity to that because algorithmically and mathematically it makes sense, right? It's easier to deal with those versus, 233 level or, some random levels when they're pairing orders and stuff like that. But yeah, the transition from quarter to quarter, it's definitely. So we'll need time to process and identify it in price. Yeah, so essentially what you want to make sure you're looking at and keeping tabs on. I use the quarters as far as identifying higher time frame SMTs between correlated assets and just overall risk on, risk off analysis, because a lot of times we can gauge when a quarterly shift is going to take place. We can gauge whether something's going to continue. And sometimes we could even gauge the overall quarterly narrative by being able to see, where price was, what it delivered to, and where it could potentially deliver away from. Especially if you can couple that with higher time frame SMT on like the weekly, daily, or monthly chart, preferably the monthly and weekly if you're going to have a quarterly assumption. I also have a quarterly time frame. That's a 3-month time frame. It's not really that helpful when we're using actual contract months. We can use the continuous contract. We could see, a bit more information. But yeah, the last like 1, 2, 3, 4, 5 quarters, aside from this previous quarter, has been pretty massive. It's been all bullish, right? It's been insane, right? So yeah, we're due for this type of decline. you can see we're reaching into a wick. All the same principles operate when you're even on the quarterly time frames. You know, you can see that this big, large retracement here. Price has declined. It's reaching into the quadrant levels on the quarterly time frame. So this is a quarterly wick, right? So if you measure that out, you can, like with the fib, break that down. You can have even further targets to layer on top of those lower time frames as price prints through that, or through the next couple weeks into the new quarter. The midpoint could end up being an objective if we do end up bearish overall, continue to be bearish. Yeah, let's actually go observe that. Let's go see what's around us. Right, so yeah, we got the midpoint of that quarterly wick. Right, you can definitely map that out. I'm gonna keep that on my chart just in case we do end up declining. It could be another justifiable target, a reason why price is reaching down there. We do have this fair value gap, right? So we'll see if this external range liquidity raid delivers to internal range, and then we'll see if price starts to displace lower again. We'll be able to see there's a target here. There's a fair value gap down below us. Right, so we still got a little further that we can go. So yeah, we'll see what takes place. We'll see what happens. Right, we're still just in a retracement inside of the downtrend. So yeah, we'll see what price wants to do. All right, but for the most part, as I mentioned, we want to watch this high, watch the response from this wick here. And if, price gets above this order block, that's going to be used for us to frame a potential run to this upper fair value gap up here. All right, and then of course we could switch back to this, and we can see the continuous contract and the actual contract month. They are a little bit different, but in terms of engagements, it's best to do your analysis on the quarterly, the actual contract month, because if you're trading live, wanting to get the most recent accurate data, a lot of times you'll miss some of the important gaps that are missing on the continuous contract, but are present on the actual current contract month data. But yeah, pretty much just very similar though, right? We saw that this order block on the other one, same with this, right? If it gets above this, violates the high and closes above it, that order block here is going to determine whether price is going to be allowed to have a framework we can engage on to reach for this weekly fair value gap, right? And then of course, if that was to fail, say it wicks above it, takes it out, declines, closes below the midpoint here, we are definitely in line to target the sell side, and that's where we would trade. That's where our main opportunities would be. And we would, look at this as a retracement to go lower. So then in the context of that, we could then start to frame out potential market maker sell models. Right? Say we go to like 10 minute, right? If it does look to violate, get down below, right? I mean, you could already see this consolidation here turned into a market maker buy model, right? First stage accumulation, second stage accumulation, smart money reversal, right? Also first stage distribution. Second stage distribution got above these equal highs. Blew it out quickly. That fast-paced run provides proof that that was absolutely a market maker buy model, breaking through the highs up here. In the context of the higher time frame retracement, right? This whole, all this stuff was very messy. People have been getting really wrecked the last couple of weeks. But yeah. So yeah, I guess we pretty much got through everything. Pretty much everything that I wanted to talk about. Let me see. Yeah, it's not far for price to want to reach down into that lower middle portion of that quarterly wick. So price could end up dropping down there. Could you perhaps please look at indices CFDs real quick? Yeah, that's the best way you can do things. You can get levels from the futures, or at least an idea, and then kind of, you still want to use, if you're trading the CFDs, it's a different asset class. So you want to make sure, although they do follow one another, the CFDs are just like a carbon copy of the futures markets. CFDs are just so other countries can have exposure to the futures markets in America. But you're still going to obviously want to get like an overall directional narrative from the futures data. But when you're trading the CFDs, you may need to use that overall data, from the CFDs. Excuse me. Man. Damn, I don't even know which one to use. Index CFD, all right. Let's see. Yeah, I mean, it's all pretty much very similar. I mean, it looks pretty close. Price levels are just a bit off. Overall delivery and price, though, basically the same. Now, like this says 19,794. The actual NASDAQ has 19,961. So it's like a 200 difference, 200 point difference. But I mean, the price delivery is essentially very much the same. Very much the same. Yeah, so pretty much everything that I talked about on the futures data, at least from what I see here on this data feed here for NAS 100 CFD, pretty much everything that I just talked about is applicable. Even this fair value gap I pointed out, it's all pretty much applicable. And then of course we go to the weekly chart. Pretty much the same thing, pretty much identical. It's just the numbers are a little bit off. Yeah, definitely stick to the bonds and yields. Do not get away from those. Just know that when there is a crack in correlation or a consolidation in the bonds and yields with the indices, just know that you don't need to demand that it has to be in alignment. It's just a whole lot more helpful and reliable and confidence building when we see things symmetrical. But when things are taking place in the world, in the economy in the United States, that presents a crack in correlation or just like a big time movement taking place, a lot of changes, sometimes there's a crack in correlation. And then in that case, you just have to depend on your technical observations. But remember, everybody, you don't have any fear. If you have fear today, you have no more fear. Why? Because we have our risk protocols. As long as we follow our risk protocols, we are planning for losses to take place. But because we have our stuff in alignment, we have our risk protocols in place to protect us from blowing out, not over trading, not over leveraging. If we take 2 losses in the week, we stop, right? Especially if there's super chaos that's going on. All of that being considered, if you take a loss, you drop your risk. All these risk rules we've always talked about, if that's in place, you have no reason to fear. Because if you follow your rules and you take a loss, that's actually a win. Because most people are blowing their accounts. And if you don't blow your account, like you don't allow that to even become a thing, even in losing streaks, it doesn't matter. As long as you're following your process, eventually the numbers will work themselves out. As long as you don't overtrade and over leverage. Because if you overtrade and over leverage, the numbers won't end up working out. Because your plan is not incorporating overtrading and over leveraging. That's a hidden piece of data that is not being accounted for. So you may have a beautiful plan and all these different rules and different things that are supposed to work out eventually. But if you overtrade and overleverage, that's like dropping a nuke into all your plans, blowing things up, and then having to come back and, I'm going to follow the plan again. And then you drop another nuke on things, and it just continuously crushes everything you're trying to do. And the odds start getting further and further and further away. So overtrading and overleveraging is never acceptable. I don't care what we feel. I don't care what we think. Oh, it looks like it's going to do this and do that. Okay, well, if it looks like it's going to do this or do that, you should not have overtraded so you can have the chance to engage that better situation. Right? Or you shouldn't have taken an entry when you did. The pain of discipline or the pain of regret. You're going to pick one. You can't have both. Okay? You want to pick one and pick the discipline side. You'd rather miss an opportunity than break your rules. I lead by example in that way. I do that all the time. This past week I did that. I missed 2 opportunities this past week live with my private community and said I would rather miss this opportunity than engage and break my rules. And guess what? I missed the opportunity. Price delivered after I took a loss with my private community and just followed my rules. So guess what? It was a win. It is what it is. It's going to happen. And I'd rather have that for longevity's sake. I'd rather face the pain of discipline so I come into days like this, I come into new weeks like that's ahead of us with a fresh mind, knowing that I can trust myself. I follow my rules. I have nothing to fear. The numbers will work themselves out. The losses will be made back because I know my rules. I know my plan is effective. Not only for myself, but for others as well who employ the same thing. So yeah. I guess we have talked about a ton of stuff today. I feel very happy about this call. We've talked about so much. It's jam-packed, powerful, and I hope you guys have gotten value. If you guys could do me a huge favor in the chat, post, one or, a couple of things that we talked about today that was the most impactful or helpful to you, that you feel can be helpful to others if they watch this. So then, for those that look at the video that gets posted here, when they look at it, they see 2 hours and they start getting, I don't know if I want to sit through that. If you guys post some of your favorite things that you've learned, it'll kind of give them evidence as far as, it'll be worth watching because this is talked about, or this was that person's favorite. And maybe, the student that wants to watch it, but feels like it's too long, maybe that'll motivate them to be able to sit down and make some time to watch it. I'll probably pull some clips as well. I think eventually too, maybe in like a couple months, I'm going to start doing group live streams. So maybe I'll pull one of you guys at a time, maybe every other week in a couple months. Some of you guys have been getting a lot of progress from this stuff. Maybe we can go live together and have a dialogue live and, make this a little bit more interactive. And I get to get closer to you guys who support me, so yeah. And of course, if you guys haven't already, definitely like the video, subscribe, share with your friends. And again, don't forget to leave your the most important or impactful thing that you've learned today. Or you could even just add the most impactful things that you've encountered on this channel in the comments as well. Just, so everybody else can see where we're headed, what we do here. So yeah, with that being said, you guys, God bless you. I appreciate you guys for hopping on. And as always, right, I will talk to you guys on Tuesday for our live call. Or you could connect with me in the Discord if you haven't already. Links are down in the description for the free Discord. And if you need private mentorship, that information's also down there as well. Yeah, you guys, with that being said, God bless, and I'll talk to you all Tuesday.